Good day, everyone, and welcome to the premium video newsletter for Wednesday, August 28, 2013. Lots to discuss today, so let's get started with the fundamentals and work our way from there. Syria is the big topic today, and this is what the major focus driving the market right now is. We did have a pending home sales report released today, and ultimately, if the U.S. decides not to get involved, the fundamentals driving the economy are going to become more important than ever. So let's keep our eye on the big picture for now and not focus entirely on Syria. Getting back to the news, the pending home sales report came out this morning, and it suggests fewer Americans signed contracts to buy U.S. homes in July. The modest decline suggests higher mortgage rates have yet to sharply slow sales down. The expectations were pretty much in line with estimates. The National Association of Realtors says its seasonally adjusted index for pending home sales declined 1.3% to 109.5. That's close to May's reading of 111.3, which was the highest since December of 2006. The small decline suggests sales of previously owned homes should remain healthy in the coming months. There is generally a 1 to 2 month lag between a signed contract and a completed sale. Keep that in mind as well. The big news right now is Syria, and we can't get away from that. What the U.S. is going to do next is really the main topic. I've been following many reports during the last 24 hours, and depending on the news station you follow, or what newspaper you read, you will get a different view of what's really happening. What I do know is the market is reacting less emotional today and is not completely blowing off Syria, but not giving Syria nearly as much thought as we did during yesterday's trading session. Technically, the broad market is near that magic 1640 level that I've been eyeing for the last several trading sessions. The key right now is for the S&P to make it past the 1652 level on the upside and begin filling the gap that we have right now below the 50-day moving average, which is at the 1660 level, or slightly lower. But for us to make it that high, we would need to see something a bit more positive from U.S. government, or at least nothing more negative than what we're seeing right now in regards to Syria. The fact that we're closing near the high of the day and the fact that we rallied today really demonstrates that U.S. investors are having strong doubt about Syria. And this is where I was yesterday. Let's see if we can continue this momentum and this train of thought. If we can, we will begin moving above the 1652 level. Traders and fund managers will begin getting more confident and bullish once again if we do. Since the selling yesterday was primarily a consequence of Syria, and selling was broad-based, I won't go into too many subsectors today because we know exactly what the cause of the decline was yesterday. However, one subsector I want to look at is the real estate sector. There's two important things I see that you need to pay attention to. The first is pretty obvious. It doesn't seem to have too much correlation with the broad market. Even yesterday, when the sell-off was broad-based, the real estate sector had no reaction to Syria. What's driving real estate right now is the very real fear of rising rates, and that's what this sector is reacting to. The second thing I want you to get out of looking at this chart is the fact that this sector is increasingly pushing the broad market lower. If you're wondering why the broad market is so much weaker than the NASDAQ, this is one of the biggest reasons right now, and from what I'm seeing, it's not going to change in the next few months. Also, this is very important, don't mix this sector up with the home building sector. They're totally different and not as closely related as you may think. This sector is primarily composed of large management companies and doesn't really have anything to do with home builders. So don't confuse the two because they're not in the same category. One thing you may want to focus on is the fact that we have a symmetrical triangle pattern in place, and these are continuation patterns. So they usually break out in the direction of the trend. And right now, that's down. So be aware of that. The next market I want to look at is the US dollar, which is reacting fairly predictably during the last few trading sessions. Typically, during times of war, people put money into cash. So we went from a downtrend to a sideways range-bound trading action. As you know, I'm still very bearish on the US dollar because the US monetary policy is not tight right now. But the threat of war is creating some support right now. If nothing develops over the next 4 to 7 trading sessions, and I believe this is exactly what's going to happen, we will see a resumption of the downtrend. Right now, we have very strong support at the 80-50 level. If we begin drifting towards these levels, many traders who are on the sidelines will increase the selling pressure, simply because breaking the 80-50 level would mean the market is breaking a 3-month channel, which is fairly significant on a technical level. So let's watch the dollar carefully, especially during the next few days. And if we don't see any action by the US against Syria, we will begin drifting slowly down and hopefully begin breaking the lower support level. Interestingly, island reversal top pattern was developed in the crude market today. This pattern typically occurs at the end of a trend before a turnaround begins. It's very similar to the tail gap, except it gaps against the trend and not in the direction of the trend, and it doesn't require a gap to begin with. These patterns don't occur very often, and when they do occur, we have to be mindful that there's a good chance a reversal is in place. If nothing materializes as far as Syria is concerned, then there is, in my opinion, over 80% chance that for now we reach the peak in the crude oil market. Only time will tell if the US is going to get involved, and to what extent. But I do know we need to see something within the next few days, otherwise this market will cool off very quickly. I don't like to trade against the trend and will wait for a downtrend to develop, but some traders who trade counter trend will begin shorting at these levels. If you do, then make sure you place a buy stop slightly above the swing high made today, and be very cautious when trading against the trend. Technically, the Aussie is once again approaching the intermediate term support level, and right now I'm not seeing anything that would cause a break below the 88.5 level. The Aussie is a weaker currency compared with other currencies, such as the US dollar or the euro, for example. So when investors and traders begin seeing a threat of war, money begins flowing out of speculative investments and into more stable ones. However, I'm not seeing any strong volatility, and frankly, I'm not seeing too much volatility in the currency sector as a result of Syria. So I'm not bullish on Aussie right now, but I'm not seeing too much selling at this point. I don't want to create panic when none exists. So let's watch the Aussie during the next few days, and we will see how the Syria crisis is going to be interpreted by financial markets. Right now, the currencies are not doing anything too out of the ordinary in reaction to the Syria crisis. The first setup is a tail gap to the downside on ticker symbol EXPR, and I want you to place a sell stop 15 cents below today's low, and if filled, place a protective buy stop about 15 cents above today's high. This stock is in the retail sector, which is below the 50-day moving average right now. And any stock below the 50-day moving average is considered a seller at this point. We always want to buy strength and sell weakness. And remember, cancel this order if you're not filled by lunchtime New York time tomorrow. The second setup is a 4x4 to the downside. The ticker symbol is EQR, and you should place an entry sell stop also 15 cents below the low created today. And if filled, place a buy stop 15 cents above today's high. This stock is involved in large real estate management, so it's very closely connected to the sector we discussed earlier today and is also below the 50-day moving average. Remember, we want to go long stocks that are being accumulated by funds and we want to sell stocks that are also being sold by funds. And this helps us stay on the right track. And remember, once again, if no fill by lunchtime New York time tomorrow, cancel the order. That's it for tonight. Have a great night, everyone, and I will touch base with you tomorrow morning. Let's stay on top of the serious situation and see what develops.